Hello, everybody. Good morning. How are you doing today? Welcome, Shariz. Welcome, Joseph. Welcome, Nana. Welcome, Rani. Welcome to my webinar. I'm broadcasting live from Mexico City. Here is 8 a.m. in the morning. That means it's 13 hours GMT time. Welcome to WoW Trades. WoW stands for week over week trades. And as I've already explained in some other webinars, it's because in a weekly basis, binary.com has given me the opportunity to approach my way of understanding the markets to the participants. With some luck, this could help traders and newbies to find inspiration to find their own path into this trading world. And again, my name is Alberto Alvarado, and I'm really glad that you have joined me today. We have a lot of things to talk about, and you will see why in some minutes. We have had 3 sessions postponing every single kind of analysis because of the Brexit volatility, but today is going to be different. Today is going to be a normal webinar with trading opportunities, etc., etc. So, if without further ado, let's begin. Well, a little bit about me. My name again is Alberto Alvarado. I'm a self-made trader that started trading here in Mexico City. I have more than 10 years of experience. In 2005, I started trading my first live account with some money that my grandfather inherited me when he passed away, and I ended up losing it all like 1 month into trading. So after that, I realized that I was not ready, of course. I decided to take it seriously and do my own research. At those times, we didn't have this handy webinars and all that, so I had to figure it out all by myself. In 2007, more or less, I started harvesting the first results of my efforts, just to see my account again evaporate in 2008 because of this well-known financial crisis in 2008. Because in that crisis, the markets decided to show me a side that I was not aware of because I hadn't lived something of that sort during my trading career at that time. So again, I lost it all. So I decided after the 2008 crisis to start from scratch and learning from the experiences of the 2008 mistakes. I decided to give it a try to add up emotional and intuitional elements into my trading. And for surprise, it worked perfectly for me. So besides, and I after that, what I decided is to add that into my ads, and my ads exponentially uh, was better. So my trading increased, my skills as a trader increased noticeably. Of course, I use traditional technical indicators, the most basic ones. I don't use fancy indicators. I don't use custom indicators. I don't buy to anybody indicators. I use MACD, RSI, stochastics. At sometimes I use CCI, but that's very strange. And I usually don't, I'm not stressed by the configurations. I usually use the standard ones, the standards in the chart package that I use, because the thing with the technical analysis is that you need to learn how to use it as a tool, no matter what configuration it has. So, well, that's a little bit about me. So hopefully with the information that you receive here, you could find inspiration to find your own way into this trading world. About value-added services are only based on demand. My goal is that after some webinars, people will start realizing about the quality of the information that is delivered here for free. And maybe some of you could be interested in having more personalized coaching, uh, much more in-depth analysis at some times, or etc. So only based on outcry demand by the attendees, I would be more than glad to offer some other kind of services, of course. I would like to remind you that since the last webinar, I commented here that I opened my completely free YouTube personal channel. And I really encourage you to go and subscribe there, and you're going to check out why. Because last week I commented that I opened that channel to being more communication with traders, and I could be yes, much more in touch, so I can adapt open trades or close trades without having to wait 1 week, because in 1 week everything can happen. A trade could turn against us. So that's the idea of the channel, to could be able to upload a video, maybe updating about a trade, maybe updating about new trades that I open in binary.com, so you can go there and check it out. You can find me there typing this IIBB's trading room channel, and then this will show up. This is my trading my YouTube channel. You just click subscribe, and there you will be receiving in your YouTube uh, updates when I upload videos. So it's and in this weekend, actually, that worked, and actually I used that for traders. So you will know why in some minutes. But I strongly encourage you to go and subscribe there. Well, for the latest 3 weeks after Brexit, we had to postpone trying to find and analyze fundamental data. Why? Because everything was ruled out by Brexit. Everything was Brexit related, no matter how good or bad fundamental data we received from a country that was not important, was irrelevant. Brexit and the fear was the thing that was ruling the markets. But fortunately, yes, as I commented in my last week webinar, it depended on how the markets reacted after non-farm payroll number on this last Friday. I could be able to read if the markets were really willing to start listening to different fundamental data besides Brexit and just passing the page on Brexit and coming over it, and just not ignore it, but just continue living and trading. And I mean, the world didn't stop because of that. And yes, non-farm payroll numbers showed us two things. First of all, that the markets were really willing to listen to other fundamental data that has nothing to do with Brexit. And the other thing is that yes, we were right. 3 webinars ago, I commented that non-farm payroll is going to be gradually less and less important, and will start losing importance, the importance it has had during these last 10 years. And yes, for the first time, I could confirm you that yes, that is in fact happening. In few words, non-farm payroll number stopped being a reliable indicator of the recovery of the economy of the United States. I'm going to get in depth in some more minutes about that. The second point is going to be analyzing the price action opportunities that were derived from the non-farm payroll number last Friday. The third point is going to the live charts to analyze potential live trading opportunities. And the fourth is to review the currently open positions. And the fifth is questions and answers. So feel free to drop any questions that you had in the chat box. You don't need to wait to that moment. You can start dropping them. And at that moment, chatties will approach me your questions, so I could be able to answer them. Okay, first of all, I would like you to draw your attention here. The fundamental highlight, finally, after Brexit, after almost a month after Brexit, we finally, the markets reacted accordingly to the non-farm payroll number this Friday, July the 8th. Okay, if you've been aware of the markets and the fundamentals, you have realized the non-farm payroll number was not only above, was amazingly above expectations, dissipating the fears that the latest FOMC meeting minutes uh, put into the market, because in those minutes the FOMC showed that they were kind of worried about, they were not convinced completely about the labor recovery in the United States. But after this non-farm payroll number, there are no doubts that the American economy is having a good time, and it's performing better and better. I won't get into the details why a lot of Americans don't believe that, because they don't see that reflected in their quality of life, because that's a matter of another kind of discussion, not a trading one. But yes, in the as a macro data, yes, the United States, with this latest data, the non-farm payroll number side, they completely ruled out some risks of having maybe the American economy not delivering the results that they were expecting to justify a rate hike in this year, at least one. But with this kind of data, if we have another data like this in the next month and the next month, we could even see two rate hikes this before year end, even after Brexit. But we will have to wait and see how it plays. As you can see, the number for the ones that are new, this blue thing that apparently is like a Bollinger Band is some sort of Bollinger Band based on fundamental data. The actual number is a linear regression with adaptive data that is in function of the fundamental data. So this is not something that you will find in ordinary trading platforms. But the idea is this: this is more or less read the same way that you read any conventional Bollinger Band. In this case, what you can see is that in the latest years, according to the data, what the number, the non-farm payroll number, was projected to go to the downside. That means that this is why the FOMC was fearful, because adding up every fundamental data of the American economy, there were still some doubts of this, seeing the non-farm payroll number going down and down. But what you've seen now is that this level even approached to the upper Bollinger thing. In the latest 1 year, this is 1 year of data. This is the number that approached the most to this upper thing. This number was really disappointing. That is why the FOMC was fearful. But this was only an exception, and I mean, you can have exceptions, and in as long as they are exceptions, and this is an exception, having a good number, a very disappointing one, a good number, and an overall good numbers, that means that we are in the right track. Let's remember that even this Bollinger Band that is based on fundamental data, even though that Bollinger Band is still a lagging indicator. These are not heading indicators. So, well, but this convinced everybody. So the markets reacted accordingly, not in the way but maybe you should have seen in other contexts, because of course we had this Brexit. So I'm going to go a little bit in detail what happened and why. But yes, the markets really were willing to listen to other fundamental data. That is why actually we had this tremendous rally from yesterday in the pound. It's because the markets got optimistic in a lot of factors. They just put aside all the fearful factors, and they just decided to come and make business as always. Okay. So, well, this is pretty much everything about this chart, but this is having here a visual. This is not only close to the highest of this latest year, of this last year. If you compare, it's the closest price from 1 year to now to the upper Bollinger. So this is a big deal. That is why the markets convincingly reacted after having this number. Reviewing a little bit, for the ones not being aware, I commented last week that we had a open trade to the downside in the USD Canadian dollar. It was 90% of the times in our favor, but at the very end, it ended up going against us. I'm going to show you a picture of that. But well, the only reason I'm showing you this is just to review what happened quickly. These were the resistances and supports when we decided to open that short trade. We opened the short trade here. The market went in our favor. We had this Brexit thing. Then the market, even after having Brexit, went in our favor again. But just in the last day, this trade was closed because only it was 11 pips against us. So it was 90% of the times in our favor. We commented during 2 or 3 webinars. While delivering the webinars, the trade was in profit. So I commented to the people that wanted to close it in profit that it was a good idea. So some of them, I believe that they closed it in profit, some of them not. One of them, I was one of them. I expected to expiration, but well, at the end, it ended up being only if you decide to wait up to the expiration in a loss. Okay, but well, that happens. In being a trader, it's about just okay. If you were wrong, no problem. It's normal. Being a trader is not being correct all the time. This is a very interesting thing, and I'm going to do this quickly because I don't want to overload fundamental and technical things. Okay, for the ones interested in knowing more and more in-depth information about this, please feel free to contact Shadish, and she will get in contact with me, approaching me your questions or your emails or etc. If you're interested in having a more detailed explanation on this. Uh, Besides, I will upload, of course, in my personal video in my personal channel in YouTube. You have already there 5, 6 videos where you can go there and listen with a much more in-depth explanation about this charts. What you're seeing here is a pound versus a dollar. Here it says in Spanish 30 years of data. What you're seeing here is 30 years of data. Every candle represents 1/4 of a year, 3 months. Every candle. This is more or less 1979. We had in the latest 30 years the highest of the pound. Some people believe that the pound, the highest was at this point when it got to the $2 per pound, but that's not true. It was above at this moment. It sank even up to the parity. It went up, and as you see, after that, pretty much pound versus dollar has been ranging. Why I'm showing you this? When you're facing some kind of what is called a black swan, events that happen maybe only once in a lifetime, what helps you to put in context what happened is looking back, putting in context within time. When you open 30 years of data, you realize this is Brexit. That's not a big deal. This is a multi-decade support. This is 2001. Do you remember September? The Twin Towers in New York being attacked. Okay. And this is the 2008 crisis. Here is a severe systemic capitalistic crisis. This crisis could have ended completely and annihilated the capitalism as we know it. But even though this price stopped this falling from falling further. So this is a big deal. Then we had Brexit testing these lows, even getting a little bit lower. But the reality is, the markets spooked were spooked because we had this surprise outcome. But the thing is that markets at this moment are not adapting to anything yet, because things are currently the same, and we really don't know what are going to be the changes. But here in this crisis, in fact, one day the markets woke up and realized that what they were believing was a dream, and suddenly they had to adapt to the reality. That is why we had this drop. And if this, that it was a severe drop, was not good enough to break the support, why should Brexit? So that is why I've been holding with other fellow traders and here in binary.com webinars and my personal YouTube videos a very bullish outlook on the cable and pretty much in the UK economy after Brexit because a lot of things including this. Creatively, I used a Fibonacci extension using these two levels here and here to have this. As you can see this, that corresponds to the 23.6% of extension of Fibonacci was the exact pinpoint of a bottom. I strongly believe that a pound won't look back. I strongly believe that a pound maybe will hover this zone, I don't know, maybe days, maybe weeks, maybe even retest a little bit again, but not going further. As you can see, here's a serious business. We need to have a very surprising thing to having this level being broken. Because if this level sustained the 2008 crisis from the pound falling further, you need such a crisis of that magnitude. And Brexit is not a crisis, a systemic crisis. So we have, I've been holding the idea that Brexit is only circumstantial, the volatility. But in fact, we're not facing at all the same scenario of 2008. The world is there, the markets are there, are working. Capitalism won't disappear because of Brexit. In 2008, we were just on the brink of really bringing capitalism down. Quickly, this is weekly chart, cable. Another thing that made me holding my bullish bias, divergences. Weekly, this is weekly chart. Okay, we have doing lower lows, lower lows, lower lows. We had the MACD here, and then here, and then the MACD finally doing a lower low here. Look, this blue line did a lower low, so you could believe that this divergence is denied, but not so completely because this green one has not been below this previous divergence. And the most important is this one. Why? This is real volume. Look at the volume here at this bottom. It's the highest in the latest, I don't know. We could go back to 2008, 12, even 10, 11. And this is this zone was the highest volume since 2011. That is why this divergency and everything that happens here should be considered of a real importance. So in the meanwhile, we have this divergence not been denied. The potential outlook for the pound, for the cable, is to the upside. And every time that it retests lows, in the meanwhile, this weekly divergence is not denied. It means buying opportunities. For the big investors, of course, for us as speculators, as traders, we really don't need that. But the thing is that in order for you to understand what you're doing and why you're doing an opening trades, you need to understand what the big guys are doing, because that gives context of what you are doing. And if you're counter trading what they are doing, you need to know why, and you need to adapt your expectations according to that. Okay, so Again, if you haven't checked the weekly charts in cable, go there and check the divergences. Maybe you won't have this volume data, but this is real volume. So again, this divergency here that corresponds more or less in the first quarter of 2015. In the meanwhile, this divergence not denied, we still have potential, and this could be considered as deep buying. Okay, and if you see this divergence, the price could even continue going down without denying that divergency. So yes, apparently the price recognized all this and considered everything below 1.3 as a bargain. This is the daily chart. This is the a falling wedge charting pattern that it's like the most eye appealing. This runs from 2014, if I'm not wrong. Okay, let me check quickly that. I'm just there. Wait me a second, please. Yes, exactly. July 13th of 2014. Sorry. Okay. So this chart pattern comes from and runs from this data up to now. Okay. As you've seen, the market has been going to the downside in a very steady way. Okay. Then we had the market being unstable these latest months, and the market finally went down. But as you can see now, the market, after breaking to the downside, the Bollinger Band continued going down without breaking it again. That it's a trading setup that could indicate exhaustion in that direction, could be preparing the market to go in the other direction. Thing that happened. If you've been aware, yesterday we had like a 350 pip rally in pound. And all this is explained through all the information that I've been giving to you. So when we talk about trading, we need to be aware of a lot of things. Technicals, fundamentals, having a very sound criteria, and being willing to ignore most of the information that a mass media gives you, because they're not interested in helping you to make money. You need to do your own analysis in order to achieve that goal. Okay, so well, here is, I believe that's not this clear because the candles are really tiny, but I believe that you can see it here. The market broke to the downside, this Bollinger Band, made a double bottom here, if you want to call it that way, and the market is exhausted here. By the way, another confirming signals that we're having a cross of the MACD here, even though it's in the negative zone, but the market managed to, after having this volatility, at least to have a crossover of the MACD lines. This is again the same Bollinger Bands that are based in fundamental data. Okay, and these are exactly the same dates that I just showed you in the daily chart. This one was a daily chart, the previous one. Okay, as you can see here, the market, the same thing, was ranging. This is an important thing. We just hit the 1.3 below. And this is in an oversold condition considering this Bollinger Band. This is a more closer data. This is March 2016. As you can, this is a glitch. Ignore this. This didn't happen. This is a data glitch. Actually, this didn't happen. But here I want you to look at this. In June, before July, we got up to the 1.5. And if you remember, that is why we had this sell-off. But because we went way above this fundamental justifiable price point. When you have something like this happening, you could face a very, very high likelihood of having the reverse movement. In this case, that happened. Of course, exacerbated because of Brexit. So that is why we had this tremendous volatility. But here is why the context. See all these bands. The price Even here, just broke to the downside a little bit. Even here, it's inside the bands. You go to the 30-year data, and it's well inside what could be expected. You go to the daily charts and to the weekly charts, you see divergences. So at those moments is when you decide to go and do completely the opposite of what the mass media is telling you. This is interesting. This mid-band, the price is just here. This could mean that, yes, in fact, we could face resistance here. But this is even a closer data, okay? The market managed to break above, but it's close to this resistance. If you manage and if you decide to believe, and if you're bullish on pound, I am bullish on pound, and you have always to be biased. You have to, and this is something that technical analysis won't give you. You need to have your own opinion. In my case, I was bullish. So I was expecting for an opportunity to buy, not to sell this, to buy. When you see this, oversold, inside the band, hitting resistance, inside the band, hitting resistance, then you can expect that the market could start hovering this price, more or less at 1.3, to the point maybe retesting previous lows. I really don't expect that, but that depends on what happens on Thursday, that we're going to have the decision of the Bank of England if it decides to cut the interest rates. I believe that they won't, and if they do, it will be only quarter of a point, not that much that mass media is considering. In any case, they cut a lot of interest and basis points. Yes, we could have another sell-off here, but having you all this information, now you know how to put in context what is happening. You could even have the price retesting yesterday's lows, even going a little bit lower or even going lower. And that pretty much doesn't change the potential bullish outlook on pound. Okay? So even if the mass media wants you to panic, don't panic. At least up to now, we are still inside what is acceptable. Yes, even having that drop, yes, it's inside what's acceptable. What fundamentals justify? Yes, we're still inside that. So there's no reason to panic. Just don't allow your emotions to take control of your trading. And don't allow the mass media to allow you that. Okay, so having all the information plus this, that this is more fundamental bias, we have a very good context on how to trade the pound. Oops. Well, this is the Canadian trade that I was talking about. We're going to review that in 30 seconds. We opened the trade here, went in our favor. We had Brexit. Even after Brexit, it managed to, this price, this barrier at the 130.25.1 to make the price even go lower again. Price retested highs, again to the back. And as you can see, it was barely on 11 pips against us. As you can see here, entry point 130.25.1, exit point 130.39.6. It's like 14 points. But yes, in the meanwhile, you have your trade 90% of the times in profit. That means that you, in fact, selected correctly the trade. You can go back to the binary.com channel on YouTube and check out the complete explanation of why I decided to use that level. We had a convergence of factors that were indicating that that was a very huge deal in that price. That is why, and it's not coincidence, that not even Brexit broke that level. At this moment, what didn't help was precisely the non-farm payroll number. Exactly that is what started changing the price action, because the markets were really willing to start doing business as usual, as normal. Well, 11 pips. As I explained during three webinars, while we reviewed the trade live, it was in profit. I commented for the ones that decides to, if somebody wants to close it in profits, okay. And well, that also talks about when you open your trade at a good point and at a good resistance. Let's quickly go to the live analysis. And now I would like to explain why I strongly encourage you to subscribe to my personal channel. I commented on yesterday that I was opening a call called binary option trade in cable when the price did this. And look what happened after. I'm going to show you that trade now. Don't think I am lying to you. I'm going to show you that. But this is the importance. Of course, I was not broadcasting a webinar. And this is the only way that you can be updated. So for the ones that were aware of that and decided to open a trade, at least I have confirmation of one person doing it. At least one. Of course, it's very difficult to verify everybody, but at least one I know that that he opened a bullish trade, a bullish call binary option trade with an expiration on Friday. Okay. So well, as you can see, I just commented that I uploaded that video at this moment, and it didn't look back. This is the trade. Here it is. I opened it. Well, as you can see, the purchase is 543. Here is the indicative price 867. Let's go to view. This is the trade. We made a precise, correct call on this bullish trade because I am combining all the information, technical, fundamentals, common sense, etc. Having this kind of trade is the exact same one that we open in Canadian dollar. At the moment we open it, it went in our favor. As you can see here, we open it at 8 a.m. 11. It was not yesterday. It was the day before yesterday. Sorry. It's programmed to expire on Friday. The entry spot was 128.89. And now we are at 132.64. That makes almost 400 pips in our favor. But guess what? Since I am not willing to run any risks on Thursday, tomorrow, of having a surprise movement by the Bank of England, because if they do that, it's a roulette to know how the markets will react because of the speech the governor will say after the decision. So yes, you could see a spike against us 400 pips in a matter of a minute. And I'm not just be willing to wait for that. So guess what? I'm going to use one of the best and most appealing characteristics of opening trades with binary.com. It allows you to close at the market when you're in profit. It's here. So at market, you can see here we have 59, 60% of the maximum potential profit if we decide to wait for the final expiration date. But I'm not going to do that because yes, this thing on Thursday could simply turn and make the price retrace 200, 300 pips, and then I will be 24 hours completely stressed having wishful thinking into having my trade closed at expiring in the money. So yes, it's a very decent, almost 60% of maximum profit, solid market, and there it is. If you were the ones that were aware of my YouTube personal channel, you had the chance to profit from this. And it was the only way. So I strongly suggest you to go there and subscribe to that channel. Well, I believe that somebody has questions. I don't know if Shadis has received any questions so far. Let's give a minute. Okay, Shadis is confirming me that apparently nobody is throwing at least now questions. Feel free to contact her or support at binary.com, and if you decide to ask me a question, just address that question to me, and they will be able to deliver the questions to me, and I will be more than glad to answer them, and maybe in my YouTube personal channel. I would like to thank everybody for listening me for 41 minutes. This was a way more extensive webinar for the reason that for the latest 3 weeks, Brexit simply ruled out doing things properly. So I had to more or less explain what has happened in a synthesized way after Brexit, and overall explaining the logic behind the failed Canadian trade and, in this case, the profitable cable trade that we opened 2 days ago with almost 400 pips in our favor. Thank you very much, everybody, for showing up. My name is Alberto Alvarado, and remember that I expect you next Wednesday. Same time, same place. And remember to trade safe, be safe, and bye-bye.